day all. Ira Epstein of Linn and Associates with your metals market update for a pretty interesting Tuesday, and this is the 13th of August 2019. We're just now getting on to about 4:45 in the afternoon. We're about 2 minutes away from these quotes going away. Interesting day. You got up to 1546. You dropped $30 in gold from its high. You got up to 1750 for all purposes in the SEP silver. Back down to 1698.5. What the heck happened? What happened is President Trump. Need I say more? The tariffs that were going to go into place September 1st have now been abated. Some will never go in because he's looking at national security, safety, some health things. Others are going to go in September 1st and another group December 1st. Now, for those of you that get my nightly commentary, I've prepared those lists for you, so you'll get to see what they are, and there's pages and pages of it. In a nutshell, the president decided properly, in my opinion, we got Christmas coming up. We need these products, and do you want them to cost more for the American consumer? I don't think so. Of course, he'll say China's paying for it, but we know better than that. We're paying for it. And by not raising certain tariffs, away we go. But it's confusing. You would think Apple'd get a break on certain products, and they did. And then another slew of their products, they don't. Those tariffs go in September 1st. So if you're asking me, do I understand it? Do I understand the logic behind it? Flat out, no. When we come to the gold market, though, the safe haven plays of the day. Maybe I should come back here. Here's the boards erasing. I can't do it. I just missed it. But your yen, the gold market, the silver's been pulled along, so I won't include that. Notes and bonds, they all retreated a bit today, and the stock market had a very good rally as the president did this. Do you want to read more into it? Well, some people will. They'll say, well, that's a sign of a thaw. I don't think it's a sign of a thaw in any manner at all, because the president immediately put a condition. He said he'll do this, and this is what he's doing, and now he wants China to live up to their word and buy more agriculture. Of course he does. Our agriculture prices are in a collapse. Will they? They have been buying pieces all the way through. Even though the press in America says they're not buying, it's not true. They have been getting some pork. They have certainly been getting soybean shipments, but they don't really take our corn. They don't need it. And that's a problem for another part. But today, with that easing, you got a relief rally in the stock market. Gold settled back a little, but for the week, you're still up $5. There's nothing wrong with that. When you look at today's action, this may have been a cap on the safe haven run that the market had. That doesn't mean it's bearish. You haven't resolved the issue of the race to the bottom on interest rates. Yeah, you took interest rates on the 10-year today from 163, 164 back to 17. Okay. That's a one-day event. But if other countries start lowering, watch out. Tonight, late tonight, you're going to get the Chinese industrial production numbers, other growth numbers from them. They're expected to come in weaker. We're looking at Germany's numbers being disastrous, to put it mildly. The European Central Bank at their next meeting, are they going to start that race to the bottom even further? Well, if that's what's going on, then this is just a pause. Remember that? And I say a pause in the gold, looking to say, okay, maybe this was one area that it paused out on. Maybe this top is the other area for a bit. When I look at the chart action, I'm going to say that because you have an outside day down, this is a trade top, and that's your trade bottom. So the blue arrow up, red down. When I look at moving averages, if the market wanted to yank back, the 18-day average is very much in play as a potential support. What blows this bearish correction part out would be taking out today's high. If that's taken out, I think you just supercharge the market, because that would be a trap for those in this range that are bearish right now. In terms of Bollinger Bands, isn't this market supposed to trade 95% of the time within it? Guess where the resistance is? We had our 5 days in a row over. We got a correction, back up to it. Is there any reason in terms of bias to be bearish? Zero. Bias, as long as you're over the 18-day average, is up. Are we in a resistance area at a Bollinger Band? If you believe the theory as I do, eventually the market runs out of steam against that number because it's going to trade within the bands 95% of the time. And then it's the psychology of the drift, as I call it. Just like, you fast cars in those parking lots, the drift, well, that's it. And that's what I think we're entering for this phase. If momentum, which is the embedded slow stochastic reading, stays embedded, this is a trap. If that number, the red, closes under 80, it gives a better probability of price making a run down to the 18-day average. That number is going to lift each day, this 18-day average. It's going up about $4 at a time, probably be near $14.70 tomorrow. I'm not saying it has to hit it, and it hasn't lost the embedded reading. As long as both numbers close over 80, that's all I care about. So on this pullback until the break proves that you lose the embedded reading, I say the bulls are still buying into the market, lose that reading, and I think they'll scoot a bit and look for the market another day. As we look at the GLD, first off, in the embedded reading, since I just talked about it, nothing's been lost. This is a pullback, and I think the pros are buying until that number is lost. You have a pattern where no longer do you have the higher lows, higher highs, but gee, we had those days over. You pulled to the right-hand side, and again, the Bollinger Band eventually proves to be that top area. So now how deep of a break, and if we get a break? It's a two-part statement, by the way. I'm going to stick my head out and just say always, the embedded reading is the strongest thing on a chart, and until it's lost, the pros are still buying. They're not in GDX. Now let's go to yesterday's action in GDX if I can with you. Here we go. Should be able to get it. This is the market yesterday. We were flirting, hadn't done it. Both numbers were still over 80 on this market, but were they embedded? Well, they were both over 80 day before and the day before. So Thursday, Friday, and yesterday. Now, if you lose that reading, you're looking for, at least in my theory, that price and the 18-day average will come together. Sometimes they don't do it at the same time. And if they don't, that's when sometimes I'll even talk on my other updates about contra-trend trades. But you first got to get to step one, which is losing it. It all happened at one time. This would not be a contra-trend anything. And notice how the market goes down, hits the 18-day average of closes. I refer to that as the line in the sand number, and it stalls at that number. That's the purpose of that line. That should be a zone. So those that were playing for a downside, I wouldn't be surprised if they took some money off the table there. But now what you're left with is a market that's overbought. If it had a big up day tomorrow, maybe it re-embeds. You can re-embed the day after you lose this being over 80 twice. The problem is the math is really against you. Go back and look at my agriculture update and look at coffee at the latter part of it. You'll see a market that lost it, then regained it, and lost it again. It gets very frustrating. It goes back and forth, and it's a sign of momentum waning to the downside. When I look at the gold-silver ratio, you've gotten to the right-hand side of the 18-day moving average of closes, which gives gold a bid over silver. Get back under it, and then the silver gets stronger than the gold. This, if you will, going sideways is also a sign. In true metal bull markets, generally you get the silver even outpacing the gold. We're not seeing that just yet. Speaking of the silver, and I'm going to get away from the September, I'm going to move to a contract that isn't trading as much, but I think it's now time to get there because most of my clientele, well, they want a little longer time in the market in the contract. But the volume is all here. And the market is stalling out. As you can see, it stalled out yesterday at the upper Bollinger Band. It finished at 1707. It had gotten as high as 1715 over the upper band of 1712. Today the band's 1780. You're at 1698.50. So this band is acting as the resistance. Where do you think the support is? Well, look where you went down to today. You went right back to the 18-day average of closes. That number was 1657.5. You hit 1651. While I'm on this subject, I think you want to scoot and take a look tonight at my silver report if you haven't seen it. It is on our website at www.iraepstein.com under the word education. Ira's metal report. You'll see the drop-down menu. It goes off our website sometime tomorrow. It's all automated. It only stays up, I believe it's 5 business days. I can't tell you the hour it's going to happen, but look at it tonight. This fits in with my report. That's what I'm trying to say. You're back to a zone now of looking for the support against the 18-day average. You're not trending yet. You have a higher high, lower low, and momentum is trying to correct. It is trying to put itself down, and at a minimum, it's overbought. But getting here, that's an important number, and now we'll see how the market churns against that if it does. I'm going to leave the September copper and move to the D's copper. Right now, the market is saying, hey, I've got higher lows, higher highs. I have an outside day up. Resistance, theoretically, the 18-day average, that line in the sand. You saw the battle it did here. I'm wondering if it's going to start it again. And certainly copper got that boost today as you're thinking to yourself, here's something that's good, no tariffs. It's not what the president did. And I keep hearing the news say it, and I believed it for a moment, that he was moving everything at first to December. Well, that's not correct. A lot of stuff goes on in September 1st. Then I heard he's removing a lot of products, and he is. But then I looked at the products on the list because I thought it would help retailers, and Apple's right in the bullseye on certain products that are going to be tariffed September 1st. You figure out what he's done. But looking at the market, that's the resistance zone. In the platinum market, let's take a look. This is how we came in. And the market fighting day after day at the 18-day average of closes. On this day, this was how we finished up: lower highs and lower highs, lower lows. You at least had a little bearishness here. The resistance is the 18-day average. First support, 852.60. If the market lets go, maybe you get to the lower Bollinger Band. It all happened in one swoop. So now you've got the lower highs, lower lows. Momentum did not turn down. It just sort of hung there. You got to that number, 844.80. You got to 839.70. You didn't bounce much. You bounced a lot. You came off that low by $15. That's a big move. In the Palladium market, we were just saying yesterday, this market's acting. All I can do is use the word acting, like it wants to rally a bit. You had an outside day up yesterday. Your momentum is just plain oversold. The 100-day average is acting supportive. Maybe if it's going to rally here, we can get something going towards that 18-day average of closes. And maybe they're unwinding the platinum-palladium spread, which is popular amongst some traders. That seems to be what it is. This is not a bullish sign. This is a sign of a market that has found its support zone, wants to get a little bit of a correction so far. And in the dollar index, I don't even know where to begin with it, because you get these wild days, you're not trending. You are stuck, like I showed the other markets. How many days in a row are you hitting this 18-day average? If you sold it looking for the break, you got frustrated. If you bought it thinking that was it came right back down on you. And then today, it decided to take out most of the past 5 days range by making the lower low, and it was on its way into a problem zone until the president, as he held one of his impromptu news conferences, decided to tell us that he was suspending the tariffs. You should have seen the stock market go on that. It was pretty exciting. So that's what you're doing. It is typical August. You're not getting follow through in many of the markets. You're getting them in the ag, there's no question. Unfortunately, it's to the downside. But today was a risk on day. Risk on. People were coming back into certain markets, and those markets they had bought, like the yen and so on, they were coming out of. If you like seasonals, I don't know if you even know what they are, but seasonals exist in practically every futures market. And what you're looking for is different times of the year that different events happen to move markets. Can you count on them all the time? I'll answer that very factually. No. But do they have a value? Yes. What I've learned is past performance cannot guarantee future performance. That's simple. If you bet on it that way, you'll get a Swiss cheese thing and a hole in your arm. It's the bet that's never going to lose, and it loses. But that doesn't mean there's not value to seasonality. Crops go in the ground, crops come out of the ground. The Fed does certain things at different times of the year. Money supply comes and goes as the market's moving. Well, more research has done this in a way where you get to play with their charts. Now, the charts are going to show you, and that's what these are here, a 30-year, a 15, and a 5-year pattern. In addition, you go back and you can look at what were defined as bull years and bear years. Pretty simple definition. Did price go up or down? Then you look at what this year is and what you think's going on, and you can look at bull years for that 5-year, 30 or 15-year pattern, and the idea is another tool. I'll repeat it again. Nothing I know foretells the future. They write, they give you an idea what the past has done, where it's at, and how you look at it. So if you'd like to get 2 weeks of this, just let my staff know. Go to our website, www.iraepstein.com. Sign up for the free offering. We'll be sure to get it to you. And remember, the silver report. You're only going to get to look at it one more time. All my reports that I videotape now, and that's how I do them, they have a 5 business day duration. They're not meant to be history. They're meant for what the markets are today. I live and die by the sword with them, and that's all you can do. I'm Ira. You have a good day.